don't stop.
I'm going to give a little bit of a strategy away. It's not the best. Whilst I'm drinking coffee, it's not the best, but it's not the worst, and it makes money. That's what it's all about. I've had to modify it slightly, as it was a strategy that I was given at the start of my my learning journey. Good throwing of words there, and I didn't really believe the guy. Long story short, I bought a strategy off of something called eBay way back in the day of 56k dial-up. Not sure many people remember that. Way before the times of ISDN or dual ability to make a call and be on the Tinterweb. Anyway, bought this strategy off of a chappie on eBay. Didn't do anything with it for about a year and a half, then really got into trading. My head just couldn't turn off. I was constantly thinking about charts, looking at charts, looking at my broker, wondering what I was doing, why I was losing money. Then decided one day, actually, do you know what, I'm going to go through this PDF and CD that this guy had sold me. And it was a one-page PDF, and it was this system that I'm about to show you. And it was quite simple. As I've always said, and I will continue to say now anyway, a strategy has to be so simple that you can explain it to your child. And your child, you know, teenager, should be able to understand it and implement it. Or you've got to be able to write it down in simple form so that someone can just follow it. And this is exactly it. So I've done a recalculation, a quick back test of that system. I've lost since, you know, way since lost the CD and PDF, but it was very simple to remember. And it was one of the ones that I went back to when I decided that I actually had to do something to make money. You can't do the same thing and expect different results. So I was losing money, you know, 7-8 years ago. So I decided, no, do you know what, sod it, I've got to change, something's got to give. And that's when I decided to actually follow a strategy. And this is one of the first ones that I followed and started making money on. You don't make a lot. You only have a few trades, but the trades that it wins on, it wins. You can't deny this. So the strategy is very, very simple. It's a moving average crossover strategy. So in order to make this strategy, you have to have a few rules in place. That's the whole point. And on this, it's for £1,000 account. For me, it was an average of 2-point spread. I've done it from the earliest date possible on a 10,000 units. So that's round about April 2018 up until today. To buy, you have to have the 100 moving average crossing over the 500 moving average. So the 100, which is the blue, crosses over the 500, which is the green. And that little arrow there tells you that it went in. Then you have to have to sell it, so to get out of that position, is when the 10 moving average crosses under the 500 and or, because that doesn't happen there, and or a trailing stop of 30 points. Now you can change that, you can make it 40, 50, you know, 100, 6, whatever you want. But what this basically means is when price comes back down against you 30 points, it will close it. So to buy it was 100 crossing over, so up through the 500 moving average. To sell it would be when the 10 crosses below or under the 500, or your trailing stop gets hit and you get taken out of that trade, and at the minute it's 30 points. A short is exactly the opposite, so a short would be 100 crossing under or below the 500, and to get out would be the 10 crossing over or going above the 500, or your trailing stop of 30 getting hit. However, it's only trading, and this is constant. You can't trade after 6:30 at night, and it's not on the weekends, only during the week. So you can put a trade on any time you like after midnight, but not after 6:30. So between 6:30 and midnight, you can't put any new orders or trades on. But after midnight, up until 6:30 that day, you can put trades on. So what happens is the 100 crosses above the 500, continues up, and then price comes back against us by 30 points. It takes us out. We get that win, and we get those profits. Here is the list of trades that it took. Here's the order list of every trade that would have been taken on that system, and there's the stats. So this is where it gets slightly complicated. So gains only on all trades is that one, but longs was better. So 693 for a long trade, 594, nearly so £99 worse, or less should I say, not worse, £99 less than the longs on the short side. Losses, we only lost £204 long, but we lost £377 going short. So you take that figure from that figure and you get this figure. So over this time frame, February 18 to October 19 was a 70% gain, and that doesn't seem a lot, does it? We'll go through what we would have made, or what we could have made from the start of the year in a minute or two. These are the worst and best months. Let's see if we can look at it on a weekly. So we do lose a little bit, but we also gain a lot more when we do win. And on the dailies, you can't really see it, but that's the best. And so the gains are a lot more than the losses, and that's what you need. And obviously there's a lot more winners and higher gains in 19 than there were 18. 18 was a bit of a pants year to start with. So this is what it looks like. Let me zoom into, and there are losers, there are losses. There always will be losses. If someone tells you they've never had a losing trade, then they're lying. But here's one that was a loss. So it entered on or roughly around the 7th of December 18. It went in our favour, then went against us. As you can see here, went dip down, dip back up again, and dipped down on the equity curve. Therefore price went against us and we lost 30. For whatever reason it didn't go back in again, because the 100 did not cross below the 500, and there's an extra caveat to that we can add on to it. So we could have got back in here, but because this is a back test on a computer simulator, I can't add in the extra bits and bobs. It'll just trade or not trade. It won't trade and if I haven't got to that level of expertise in programming. So you could have got back in here, but we're not going to go through that just yet. I'll show you later on. And one of the winners would have been here. So as we've gone in at this point, roughly on the 7th of March 2019, it went in our favour and then bounced back 30 odd points, or 30 points, took us out for a win. And you can see by the equity curve going up and popping back down. That's when price came back 30 points against us. Another blip, another blip. It's small incremental gains. That's what we're after. So nothing, no trade gain, no trade gain, no trade gain. So you can make money in the markets by only trading a few times, and you will lose money. That's a given. That's a guarantee. You'll lose some trades some of the time. You've got to come to terms with that. That is a given. So let's change this up a bit. So just, think about that. We've made £705 profit roughly, which is a 70% gain. Now let me go back to this 1st of January or 2nd of January as it is on here. And let me bring that back up again. There we go. So since the 2nd of January this year, you would have, or the system, the strategy would have made a 78% gain. 12 trades, 8 winners, 4 losers. So that's twice as many winners as losers. Worst trade was £81 loss. Best gain trade was £213 win. And here's the performance stats. Now, for a simple moving average crossover strategy, that's pretty amazed. Let's change it and see what else we can do to make it better or worse. And I've already tried. Whilst I drink my coffee. And just to put it out there, if I'd have actually done this from 7 years ago, 8 years ago, and you compound, you don't take much money out, if any at all, you compound it, and instead of having £3 a point, you go to £6 a point, you go to £10 a point, 12, 15, 25. This would have made an incrementally massive amount of return for me. It didn't, because after about 6 months, I got off. In fact, I got off with not making those massive gains that everyone was talking about. Oh, follow me, you'll make £1,000 a day. Anyway, let's see what happens when we change our trailing stop from 30 points to 60. So we still make, come back, we still make 79% gain, but we do it on the last couple of trades. And our worst trade was 147. It's more gains and less losses, and it's equal to 6 and 6, 6 winners, 6 losing, and we're in the market longer. But that's not the point. The point is we want it to be safe, we want it to be secure, we want it to be incremental, slow gains. So let's change that to 15. So with 15-point stops, we only make 55% gain. Say only. That's amazing. On a £1,000 account, we've made £558 since the start of the year. Just think about that. Just have a think about that. Maximum drawdown was £84. And your maximum run-up was £570. And yes, this is on the Aussie yen, but it could be on anything. We'll add it, we'll put it to something else. No biggie. You're only in the market for 1.62% of the time, which is nothing. It's literally nothing. So the less you risk, the more you can make. Remember, that's 15 points against us. So we need to have a happy medium. So if that one was 15 and we were at 30 to start with, let's try 10. Let's just go for 10. Over that year, since the start of 2019, only £114 gain, or 11% increase. So having a 10-point stop, or 10-point trailing stop is no good. 15 was good, so let's try 20. I mean, £114 still good. That's still good. So this one has made £564 gains, and that's only from the beginning of this year. Now then, that's on a £1,000 account. Let's bung in 5,000. Let's buy, well, let's bring in my calculator so you don't think I'm pulling wool over to eyes. So 5,000 minus, let's go for 3%, is 150 quid. So 3% of 5 grand, £150. Boom. 150 divided by, what was it? Oh, hold on, what? Go away. 150 divided by, what did we say? It was 15, wasn't it? So 15, no, 20 is 7.5. So let's put 7.5 in there. Short 7.5. So it says here that it's made 1,500 quid. That's a 30% gain. So even with £7.5 per point, you're still only making 30%. There's your trades. So let's put it back. Let's go and say, actually, no, I can't afford any of that. It needs to be my maximum that I can risk, which is £1 a point. £1 per point. And you've only got £1,000 in the account. You can't afford to put any more in. That's what it is. At the end of the year, you've still made £188. With 12 trades, 7 winning, 5 losing. But wait, that's with 20. Let's see what happens if we go back to 30 again. I can't remember what it was at 30. Can you? No. £260 gain, that's a 26% increase on £1 per point. Let's go with 50. Bang. And this is how you change a strategy to suit yourself. I mean, I'm happy with how it was to start with. That's how I traded. That's how I started making consistent profits. Small incremental increases in gains makes all the difference. £747.40 gain, which is a 74% increase. We're not losing that much money on those trades. On £1.50 a point, all you need is for price to go in your favour for 50 points or more. So 50 point, let's go for 70. Let's just bung 70 and see what happens. 50 point trailing stop is a 747 return. A 70 point stop is no better, 721. But it's not just the returns you're looking for, the percentage returns. It's also the consecutive losses and drawdown. It's the max run up you're after. And the best game was 710, which is better, but nowhere near as good as before. So let's go for 40. You know, 50 is good. Excuse me whilst I drink my caffeine. So here we go. This is looking good for me. This is a steady incremental increase in gains. You don't want wild swings. You don't want massive, you know, £1,000 Hail Marys. You don't want anything like that. Max drawdown of 170 with 2 consecutive losses. Max run up of 524. The downside is worst trade was 58 and the gain was only 120. It's a 36% increase. So you can't really say no to that. I mean, it's looking like 50 would be the one to go for. I've got to keep moving off the screen, otherwise I'll lose it if I hit the back test button. So this one's 429. You can see there it started off with 1,000. Now it's 429.40, which would be 42% increase. We're still, you know, we've got a little bit of a better gain, but again a worse loss. Average of 88 quid gain. Still 7 and 5. So it's not the strategy. The strategy works. It's how you manage it. Let's do it one more time. Let's go for 55. See what happens there. Move that back off. Back test. And with 55, you're looking at having no money, no gains, no percentage increase, decrease, no slight decrease, a little bit of an increase, but then straight into a decrease again. Massive, massive. These are huge wild swings that you can't predict and don't need. What you need is the not guaranteed, but the more stable increases. So let's go for 35. Yeah. Oh, the other way. Pro back test. So 35 point trailing stop gives us a 47% return, near enough 50%, isn't it really? But it's this we're after. Increase, a little bit of a decrease, never negative, increase, nothing, increase, nothing, nothing, increase, nothing, increase, nothing, increase, nothing. You're after that slow and steady build up of cash, build up of your portfolio. Remember, consistency is key. You've got to give trading and your trades time. You've got to. If you just hit the buy button and you're not a millionaire by next Wednesday and you go, oh, it's not working, then it's not worth it. It's not for you. Go away, do something else. You've got to have the money. You cannot make £1,000 in a week from £1,000. You can make £1,000 a week from £100,000. Yeah, no worries. You could probably just about make £100 a week from £1,000 if you really, really banged this out and did 5 or 6 of these Forex things together. But you've got to have the money to trade. And on top of that, you've got to be able to manage your money, manage the losses, manage the winners, be psychologically able to cope with the downturn in your fund. And you've got to have a reason. And what I mean by that is a reason for entry, a reason for exit, and a reason to trade in the first place. Let's have a quick moolag at let me get rid of this. Have a quick moolag at a different Forex pair. Let's look at major Forex pairs. Let's go with oh, I can't, can I? No time. Thanks for watch rating. I think with everything that's gone on today, with the no trading, no signals being given to me, I've set a few ready to go, but I'm not in them. Nothing's actually happened yet. And looking at the back test side of life, giving away, well, not giving away, but telling you one of my first ever profitable strategies might help you guys realize that it's not all singing or dancing. It's not Instagram money. It's not buy Ferrari by next Thursday. It's not about that. It's about slow incremental gains. It's about knowing when you can and can't trade. It's about knowing what you can trade with what system and what strategy.